Welcome everyone to Vested Interest. This is Shane back again. I hope you got all your Christmas shopping done. You guys are ready for the holidays. Maybe taking some time off work or getting ready to take some time off work. Today I really wanted to touch on 5 stocks on my watch list. Just waiting for a pullback. Stocks that are just a little too expensive right now. Good companies, just don't like the valuations. Now, I don't believe in timing the market, but that doesn't mean we can't use some metrics to help us gauge if a stock is overvalued or not. I'm a value investor, and I'm always looking to buy what I'm going to buy anyway on sale. That's actually the best part of dividend growth investing. I'm always actively looking for the best value while also getting a return on my investment while I wait. Hopefully, if I'm already in the position, if the position goes up, that's great. I get the stock appreciation plus the dividend. And if my position goes down, I can lower my cost basis, continue to add to my position at discounted prices, and get even more bang for my buck and still get the dividend. And if the market goes sideways, I get the dividend and can add at fair value as long as it remains at fair value. It's really a strategy if done correctly, patiently, and consistently. It's a lot of fun, provides great returns over time. Now let's get right into the video. These are 5 stocks I'm looking to add to my portfolio, but right now they're just too expensive. But if they were to go on sale in 2022, I'm going to be adding them to the portfolio. First up on the list is Waste Management, ticker WM. We all like to take out the trash, just head off, do whatever we're going to do for the day, go fishing, hunting, golf, whatever it is you do. And when we come home, trash is gone. Trash man has come and picked up the trash. Maybe we take the trash can back into the garage, and next week we do it all over again. Waste Management isn't going anywhere. Your trash isn't going anywhere except to the dump, which is where Waste Management will take it for you. But it's just pretty expensive. If you look here with a PE ratio of 38.98, here, let me highlight this, with a PE ratio of 38.98, it's just extremely high. Even in this market, that is a high PE. Current price today at the close of business was $160.59. After hours, it's up a little bit to back up to 160, 170. And then if you look here at the 52-week range, its low was $109.11 and its high $168.04. It does pay a dividend of $2.60 per year per share, and it does have a 1.61% yield, so about market, same yield the market's producing for dividends anyway. But again, just a real high valuation. I would much rather pull back towards the 109.11 to pick this up, even at let's say 120, 125. I would probably be interested, but at 168, even at 160 where it's currently at, it's just a little overvalued. The other thing that getting it at a lower value does, it will actually increase the yield here. So the lower I can get it, or the closest to this 109.11 that I can get it, the higher this yield will be, probably even closer to 2% if it got back down to this 109.11. All right. Next up on the list is this is a company my wife and I use. We shop here. Great company. Love the company. Costco Wholesale Corporation, ticker COST. But again, $548.56 per share. I mean, this is just, in my opinion, extremely overvalued. 47.17 PE ratio. Again, even for this market, that is crazy high. It does have a forward dividend of $3.16 per share, and that's 0.58% dividend yield. But again, here, look at the 52-week range. Within the last year, this was all the way down at $307, and now it's $548 at the close of business. After hours, $550. So it's crept back up in the after hours, but $548.56 during trading at the end of trading today. I mean, I would love to get it back here in this 307, even at maybe 400 or 380. This might be worth looking at, but 566 or even 548 where it's currently at, 566.55 was its 52-week high. I just can't see, I don't see any value there. And that to me, if you're picking this up at this price, you're not really a value investor. Maybe you're in it for the $3.16 for the dividend and you don't care about the cost, that's fine. But to me, that's just overpriced, and I'll wait for a pullback, hopefully in 2022. Now, number 3 on the list, this is another one that my family uses, pretty regular. If I've got a home building project, or even if you've got a home building project, or you hire someone, chances are you're going to go to Home Depot. I'm going to go to Home Depot for sure, maybe Lowe's a little bit. And probably if you're using the contractor you're using is going to head there too. So I love the company. Again, another one, I absolutely love the company. I just do not like it at this value. $389.40 at the end of trading today. After hours, it's actually down a little bit to $384.80. PE ratio not as high as the other two. I mean, it's 26.04, but still pretty high. 26, anything above 20 is a pretty high PE. Even in my opinion, 18 is getting up there. Forward dividend yield $6.60 per share, which gives it a 1.7 dividend yield. But again, if you look at the 52-week range, it's been as low as $246.59, as high as $420.61, and at currently $389.40, it's much closer to that 52-week high of $420.61. So if you could get this one again below 300, 280, anywhere 280 or low, I'd probably look this one 270 maybe, depends on what your risk tolerance is or what you're looking for a return. But to me, anything under 270 would probably be worth a look for Home Depot. But at $389.40 per share, I'm just not interested currently. Next on the list is a behemoth, Microsoft Corporation. Now, some people might argue this one is worth picking up now, and I know some people that are picking it up now and think they're perfectly comfortable picking it up at these prices. To me, I feel it may be just a little overvalued. The PE ratio is 35.79, which with a big tech company like this, maybe you allow a little higher PE. May say 20 maybe isn't too high for you. Say maybe 25 or 26 is, but at 35, that's pretty high in my opinion. Currently $319.91. In the after hours, it's actually up a little bit, $321.90 looks like. And again, I look at the 52-week range. This has been as low as $211.94. Excuse me, as high as $349.67. And currently at $319.91. I'd look to hopefully a little pullback if the market continues to kind of go up and down the way it's been, be a little volatile. Maybe we get it back in this, I mean, I don't know if it'll go back to $211 like it did back here, but it could. And if it did, I'd be definitely all over this one. It does have a forward dividend of $2.48 per share, which is a 0.77% yield. But I'd say anything on this one, 270, 260, really, I'd love it at 250 or lower. But I don't know, this, like I said, this one is a pretty fast growing company and people do like it. So you do maybe pay a little bit more of a premium for something like Microsoft. But for me, if I haven't pulled the trigger on it yet, so if I could get it back down here closer to this 211, I might be interested, or I would be interested. Last on the list, number 5 on the list, is Apple. Now, I'll be honest, I was actually looking at these guys earlier this year at $125 per share. And I did not pull the trigger. I probably should have at the time. But again, you look here at the PE ratio, 30.26, pretty high, even for Apple. I know some people might argue that there's a lot to come with Apple, with the Apple Car, and I don't know, some other things they have in the pipeline. But still, you're trying to jump into an electric car market with a lot of other players, with GM running in, Ford jumping in, Nissan. I mean, everyone's going to be making, Tesla's already making electric cars. You got Rivian and several others that are in the market as well now. Every car company is going to be making electric cars. And to me, I know that there are some people that are just brand loyal. People who are driving GMs now are going to buy and drive GM electric vehicles. People who are buying and driving Fords now are going to buy Fords, electric truck or cars. People driving Nissans can buy Nissans here in a couple years. So I just don't see, even if Apple does jump in and maybe because they do have a pretty big following. Maybe people who are using Apple products decide they're going to drive an Apple car. But I don't know. There's just a lot of competition, so I don't see how that adds a ton of value to what their business is already. Now, again, we'll look at the 52-week range. $116 was its low, $182.13. So it is down off its high of 182 down to 169.75 currently. But boy, I sure would like it back in that 125 range it was earlier this year. And even, I would say at this point, 130. Currently, I don't know if I mentioned it, the PE was 30.26. Again, pretty high even for this market. And even to me, a company like Apple, I mean, it's starting to get to be a pretty big company. 30 PEs, are fine whenever you're growing 50, 60% a year. But when you start leveling off a little bit, you should get back into more reasonable 20 or lower PEs. But Apple is definitely one I would love to pick up for around 125 or lower, $130 or lower. And guys, that's it. That was number 5 on my list. A quick disclaimer, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria. Or seek the advice and counsel of a certified financial advisor. So guys, let me know what you think in the comments below. You own any of these companies? You looking to add any of these companies? Maybe you've already got them in your portfolio and you're looking to increase your position. Let me know in the comments below what you guys are doing. And don't forget to hit that thumbs up button, ring the notification bell, and if you haven't already, subscribe to the channel. Help us grow, hitting that thumbs up and dropping a comment below, guys. That really helps the algorithms. Ringing the notification bell and subscribing to the channel helps you, lets you know whenever we're putting out future videos. It'll notify you so you don't miss anything. Well, this is Shane. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Take care, guys. We'll see you next time.